Hello dear students, myself CMA Padmaja Buzruk. I will discuss accounts of joint stock companies. Go to study note number 1, accounting of shares and debentures. I will discuss illustrations on issue of bonus shares. Go to illustration 16. Following is the extract of balance sheet of Y Limited as at 31st March 15. Authorized capital 15,000, 12% preference shares of 10 each, and 1,50,000 equity shares of 10 each. Then you have been given issued and subscribed capital 12,000, 12% preference shares of 10 each fully paid, and 1,35,000 equity shares of 10 each 8 paid. Under reserves and surplus, you have capital redemption reserve, general reserve, capital reserve, securities premium, profit and loss account. Under secured loan, 12% partly convertible debentures of 100 each. On 1st April 15, the company has made a final call at rupees 2 each on 1,35,000 equity shares. The call money was received by 20th April 15. Thereafter, the company decided to capitalize its reserve by way of bonus at the rate of 1 share for every 4 shares held. So that means bonus shares are issued in the ratio of 4:1. If equity shareholder is having 4 shares, he has been given 1 share free of cost. So on 1,35,000 equity shares, 1,35,000 divided by 4, 33,750 bonus shares are issued at rupees 10 each. Securities premium of rupees 37,500 includes a premium of rupees 7,500 for shares issued to vendors pursuant to a scheme of amalgamation. So out of securities premium account, you can utilize only 30,000 because 7,500 is not received in cash. Capital reserve include 60,000 being profit on sale of plant and machinery. Similarly, out of capital reserve, only 60,000 can be used. 20% of 12% debentures are convertible into equity shares of rupees 10 each fully paid on 1st June 15. So you have been given 12% debentures value, which is 7,50,000, 20% of 7,50,000, that is 1,50,000 worth debenture will get converted into equity shares on 1st June. So that means 1,50,000 worth debentures will be now 1,50,000 worth equity shares. Value of equity shares is rupees 10. So these debentures will get converted into 15,000 equity shares of 10 each. You are required to show necessary entries in the books of the company and prepare extract of balance sheet immediately after bonus issue but before conversion of debentures. Are the convertible debenture holders entitled to bonus shares? Yes, of course, convertible debenture holders are entitled to get bonus shares on the date when the debentures get converted into shares. They are entitled to get bonus shares in the same ratio which was given to equity shareholders. Now we'll see journal entries. Equity share capital account debit to equity share final call account debit to equity share capital. This entry is to show final call due on 1,35,000 equity shares at rupees 2 per share. Final call received bank account debit to equity share final call 2,70,000. Next entry is bonus is issued to equity shareholders. Capital redemption reserve account debit 30,000. Fully you can use CRR, capital redemption reserve. Capital reserve only 60,000 to be used, which is received in cash. Securities premium only 30,000 to be used, which is received in cash. General reserve 1,80,000 entire amount to be used. Profit and loss account balance figure 37,500 to be used. Bonus to shareholders is 3,37,500. Just now we have seen bonus is given in the ratio. Just now we have seen here bonus shares are given in the ratio of 4:1. So for 1,35,000 shares, they are entitled to get 1,35,000 divided by 4, 33,750 bonus shares at 10. So it is 3,37,500. This is bonus to shareholders. So from 3,37,500, if you deduct all these accumulated profits, you will get balancing figure which gets transferred to profit and loss account. So your journal entry is capital redemption reserve account debit 30,000, capital reserve debit 60,000, securities premium account debit 30,000, general reserve debit 1,80,000, profit and loss account debit 37,500 to bonus to shareholders and bonus to shareholders to equity share capital 3,37,500. They have asked you to prepare extracts of balance sheet. So we'll prepare first notes to accounts, share capital, authorized share capital. See, after bonus issue, your capital will be 1,35,000 shares plus bonus 33,750, which is equal to 1,68,750. So in this case, authorized capital, if you see, was only 1,50,000. But after bonus issue, your capital will be 1,68,750, which will be more than authorized capital. So you are supposed to write a note that it is assumed that a resolution is passed whereby authorized capital is increased. Bonus is in the ratio 4:1. So 1,50,000 divided by 4, 37,500 will add in authorized capital. So authorized capital will be 1,87,500 equity shares of 10 each, which is 18,75,000. There is no change in authorized preference capital, 15,000, 12%, preference shares of 10 each, 1,50,000. Total is 20,25,000. But only paid up capital will go into your balance sheet. Paid up capital is correctly given here. 1,68,750 shares of 10 each fully paid. You have to mention in bracket out of the above 33,750 equity shares of 10 each were issued by way of bonus. So equity capital is 16,87,500. 12,000, 12% preference shares of 10 each 1,20,000. So paid up capital is 18,07,500. Reserves and surplus. Capital reserve was 1,12,500. Out of that 60,000 was used for bonus. So balance is to be shown under reserves and surplus. Securities premium account 37,500 was there. Out of that 30,000 was used for bonus. So 7,500 is balance. And profit and loss account was having 2,70,000 balance. Out of that 37,500 was used for bonus. So remaining 2,32,500 is in profit and loss account. So total amount of reserves and surplus is 2,92,500. Long-term borrowing, in that you have secured loan 7,50,000 debentures, 12% convertible debentures of 100 each. You have to mention in bracket. Out of the above 1,50,000 debentures, that is value of 1,50,000, 20% is getting converted into 15,000 equity shares of 10 each on whatever is the date you have to mention. This is the total 7,50,000. Extract of balance sheet. Just now we have seen three notes: equity and liability, below that shareholders fund, share capital, note number 1, 18,07,500, reserves and surplus, note number 2, 2,92,500. Non-current liabilities, you have note number 3, 7,50,000, which is debentures. Total is 28,50,000. Working notes: capital reserve realized in cash can be utilized for issue of fully paid bonus shares. As per SEBI guidelines, securities premium collected in cash can only be utilized for bonus issue. This we have already discussed. Capital reserve and securities premium is to be utilized for bonus if and only if it is received in cash. As per para 3 of SEBI guidelines, no company can issue bonus shares to its shareholders without extending similar benefit to convertible debenture holders. Pending such conversion, necessary number of shares should be earmarked for convertible debenture holders. Therefore, convertible debenture holders are also entitled to bonus shares in the same ratio as equity shareholders, that is in the ratio 4:1. Fourth working note is given, but it was wrongly given. Just you have to mention that it is assumed that company will pass necessary resolution at its general body meeting for increasing authorized capital. Amounts whatever they have given figures are totally wrong. Authorized capital is given in the book is 1,50,000. Bonus is in the ratio 4:1. So in that you have to add 37,500 bonus issue plus 15,000 shares are issued, equity shares are issued to debenture holders after conversion, and they will also get bonus in the ratio 4:1. So they will get 3,750 bonus shares. You have to mention all this, but no need of mentioning total number of shares in authorized capital. Just you have to make a note, write a note that it is assumed that necessary resolution is passed at meeting for increasing authorized capital. That note is enough. Now we'll go to illustration 17. Following is the balance sheet of Reliance Company Limited as on 31st December 18. Issued and paid up capital 2,25,000 equity shares of 10 each fully called up, less calls in areas 25,000 shares of rupees 2. So calls in areas 50,000 on 25,000 shares they have deducted. 1 lakh equity shares of 10 each, 4 paid 4 lakh. So there are two types of equity shares. 2,25,000 equity shares of 10 each they have fully called, and 1 lakh equity shares of 10 only 4 they have called. Then profit and loss account, dividend equalization reserve, general reserve, development rebate reserve, capital reserve, securities premium, capital redemption reserve, current liability, and total is 61,50,000. On assets you have non-current assets, in that fixed assets 30 lakh, current assets 10 lakhs, cash at bank 21,50,000. Total of the assets is 61,50,000. The board of directors of the company took the following decisions: forfeit the shares on which final call of 2 is due. Just now we have seen call scenarios. 2 is due on 25,000 shares. They have asked you to forfeit the shares on which final call at the rate of 2 is due. To issue fully paid bonus shares at ₹1 fully paid up share for every 2 fully paid up shares held. So bonus shares are to be issued in the ratio of 2:1. To pay bonus to partly paid shares at an equivalent rate as in B above, that is this, without collecting any amount from related shareholders. There are two types of equity shares. One share they have fully called rupees 10, and one share they have just called 4 rupees, and they are also entitled to get, partly paid shares are also entitled to get equivalent rate of bonus which fully paid bonus equity shares are getting. Reissue forfeited shares at 12 each fully paid up. These forfeited shares 25,000 they are reissuing at 12 each to pay dividend equivalent to 10% on share capital including bonus. Dividend they have decided to pay 10% on share capital. To issue right shares in the ratio of 1 fully paid up share for every 4 existing fully paid shares held after bonus issue at 15 per share. So right shares are issued in the ratio of 4:1 at rupees 15 to use minimum balance of profit and loss account. Notes are given. First note, all capital reserve are realized in cash. So entire amount whatever you have in capital reserve is to be utilized for bonus. 1/5 of development rebate reserve is free. Out of development rebate reserve you can use only 1/5. Pass necessary journal entries in the books of company including cash transactions after the above decisions are implemented. So all this you are supposed to pass journal entries for all this. We'll see one by one. First is they have decided to forfeit 25,000 shares for non-payment of final call of rupees 2. So that means 8 rupees is paid, 2 rupees is not paid. Whatever is not paid will get transferred to call scenarios account, and amount received on forfeited shares will get transferred to share forfeiture account. Equity share capital account debit 25,000 into 10. To call scenarios 25,000 into 2. Amount not received on forfeited shares. To shares forfeiture account 25,000 into 8 amount received on forfeited shares. This entry is for forfeiture of 25,000 shares. Next entry is bonus given to shareholders. Out of 2,25,000 shares, just now we have passed entry, 25,000 shares are forfeited. So only 2 lakh shareholders are entitled to get bonus in the ratio 2:1. So on 2 lakh shares, 1 lakh bonus shares are issued at rupees 10. 1 lakh into 10 is 10 lakh bonus will be given to shareholders. And bonus is to be given from all these accumulated profits. Last general reserve is balancing figure. Capital redemption reserve debit 4 lakh, securities premium debit 2,50,000, capital reserve debit 1,50,000, development rebate reserve debit 50,000, general reserve debit 1,50,000 to bonus to shareholders and bonus to shareholders to equity share capital. Development rebate reserve, it was given in the question in the note that only 1/5 is to be utilized. So only 1/5 is used. So bonus to shareholders 1 debit and 1 credit. Net effect is reserves and surplus debit to equity share capital. Next is partly paid equity shares are also entitled to get equivalent bonus which fully paid shares have received. Fully paid share capital was 2 lakh shares of 10, 20 lakhs, and they got 10 lakh worth bonus shares. Just now we have passed journal entry. Bonus to shareholders was 10 lakh and capital was 20 lakhs, 2 lakhs into 10. So that means 50% they received by way of bonus. So equivalent 50% amount partly paid equity shares are also entitled to get. Partly paid shares are 1 lakh equity shares on which 4 is paid. That means they have paid 4 lakhs. 50% of 4 lakhs is 2 lakhs they will get by way of bonus. Number of shares are 1 lakh. 4 lakhs they have paid. So 2 lakh worth they will get bonus. 2 lakh divided by 1 lakh. 2 rupees per share they will get as bonus. Now this entry is for bonus to partly paid shares. Equity share call to equity share capital. Call money due on 1 lakh shares at 2. If call money is received, what entry we pass? Bank account debit to call. But here bonus is given. So your entry is bonus to call. Equity share call to equity capital and bonus to shareholders to equity share call. And this bonus is from accumulated profits. So equity shareholders, partly paid shareholders are also entitled to get equivalent bonus, which is 50% of amount paid by them. So this bonus is from accumulated profits, dividend equalization reserve and profit and loss account. So bonus to equity shareholders, 1 debit, 1 credit. Equity call, 1 debit, 1 credit. So net effect is accumulated profits to equity share capital. So these set of entries to be passed: equity share call to equity share capital to show call money is due, dividend equalization reserve debit, profit and loss debit to bonus to shareholders, bonus due to shareholders, and bonus to shareholders to equity share call. Bonus is given to shareholders by adjusting call money. They need not pay this call. 25,000 forfeited shares are reissued at 12. So bank account debit 25,000 into 12, 3 lakhs. To equity share capital 25,000 into 10, 2 lakhs 50,000. To securities premium 25,000 into 2, 50,000. This entry is reissue of forfeited shares. 25,000 forfeited shares they have reissued at premium because they have reissued at 12 above face value, which is 10. All the forfeited shares are reissued. So whatever balance you are having in shares forfeited account at the time of forfeiture will get transferred to capital reserve. Shares forfeited account debit or shares forfeiture account debit to capital reserve. In reissue entry, share forfeiture account won't appear because forfeited shares are reissued at premium. In reissue entry, shares forfeiture account will appear if and only if forfeited shares are reissued at discount. Now next entry is 10% dividend is paid including bonus shares. Equity capital 2,25,000 shares. Even if 25,000 shares they have forfeited, again they have reissued. So equity capital is 2,25,000 shares of 10 is 22 lakhs 50,000. 10 lakh bonus is given to them. 6 lakhs, 1 lakh partly paid shares, 4 paid is 4 lakhs plus 2 lakhs bonus, total is 6 lakhs. Total capital is 38 lakhs 50,000 dividend to equity shareholders. 10% dividend is to be calculated on this equity capital of 38 lakhs 50,000. Profit and loss account debit to equity dividend. This is to show dividend due and payment of dividend, equity dividend to bank. 3 lakhs 85,000, which is 10% of 38 lakhs 50,000. Right shares are issued in the ratio of 4:1 to fully paid equity shares. Fully paid equity shares are 2,25,000 plus 1 lakh bonus is given to them. So totally fully paid equity shares are 3,25,000. Right shares are in the ratio 4:1. So right shares will be 3,25,000 divided by 4, 81,250. Right shares are issued at 15, 10 would go to capital and 5 would go to securities premium. Bank account debit 12 lakhs 18,750, 81,250 multiplied by 15. To equity share capital account 81,250 into 10. To securities premium account 81,250 into 5. In this particular video, I have discussed illustration on issue of bonus shares. Thank you.